Hello and welcome to the big picture. After a roller coaster ride during the last year, which saw some record crashes as well as climbs, the Sensex has seen a steady climb in the last few weeks, with it even touching the unprecedented levels. The Indian economy, which has seen probably its lowest in GDP growth in the last decade, also is facing stress. The recovery of the stock market is being watched keenly. What has happened in the last few weeks for the stock market to be climbing the way it has? Is the rise in Sensex matched in the mid-cap and small-cap segments? What does this rise in Sensex and the general positivity in the market mean? Is it something which will last, and if not, what will be the factors which can bring the markets down? How should small investors look at the market and behave? Is this a time for us to be optimistic or rather take it all with an element of caution? We will look at all this today with Ajay, former Secretary, Union Ministry of Commerce and Industry, Shantanu Guha, Senior Journalist, Professor N.R. Bhanumurthy, Member, National Institute for Public Finance and Policy, and Akash, Jindal, Managing Director, Pew Growth. Welcome to all of you.
Thank you.
Professor Bhanumurthy,
yeah.
Is it the advent of the election season which is influencing what's happening in the markets?
Well, in my view, generally the stock markets are mostly forward-looking. So the kind of trends that we see in the stock prices, I think is largely to do with some kind of positive sentiments building up in this Indian economy, which is not really reflected in the macroeconomic data till now.
Right.
So my guess is that it is because of some kind of policy measures that have been taken in terms of investment policies, and also some of the policy measures that have been taken in the budgets seems to be giving some kind of positive sentiments, and which is reflected in the stock market behavior. And at the same time, I would like to highlight that this means that Indian economy, particularly the manufacturing sector, seems to have really bottomed out. So we do expect a recovery in all these segments going forward. So overall, I think this reflects some kind of positive sentiments building up in the economy, maybe running up to the elections, we're really not sure. But overall, I think Indian economy is going to see kind of upward movement in the next 1 year or so.
So, would you agree with that? Would you agree that some policy measures have resulted in this?
I'm not so sure about that. I think if you look at why the stock market has been on the rise in the last couple of weeks for sure, and the last 2 or 3 days at an unprecedented pace, it is largely because of inflows of foreign institutional FII money. The FII money which has come in the year 2014 itself, 10 weeks of which we have seen, has been an unprecedented $1.3 billion. This is as against a negative inflow during the year 2013. The January we saw some amount of 12 million or so coming in. The next month it went up 3 or 4 times, and now several fold it's gone up. The foreign investments or foreign FII money is coming in here, not necessarily because of the policy changes which have taken place, but
what's happening in other parts of the world.
One, that's exactly how do the FIIs see the currency of the other countries, particularly the emerging markets like Brazil, Turkey, Russia, and others, Russia, etc., and the position which we are seeing in Russia, Ukraine created. Right. Second, there's some amount of economic data which has come in recent days, recent weeks, which has been very positive. And the economic data which actually surprised everybody, and I'm sure even the government, was when they announced that the CAD,
the current account deficit
for the third quarter was barely 0.9% of the GDP, compared and about.
So that you won't say that the coming down of the current account deficit is due to some policy measures of the government. You don't want to give the government the credit.
No. I would be the last one to hesitate to do that. After all, considering my background, but let me put it this way: the imports, CAD has improved because our imports have come down.
Right.
And the imports have come down because the economy has slowed down. The capital goods imports into the
But
country have been
the
low.
import, the ban or the restriction on the gold import of gold has been one of the factors for the current account deficit to have been controlled.
Certainly,
Would
but
you
at
agree?
the same time, Mr. Nikam, you got to see some figures which the Gold Council of the World has brought out. It says, yes, the import of gold into India through official channels came down. But the unofficial channels, whatever you call it, smuggling, the other ways, that went up considerably because this is the wedding season in India. So I would say it has been good economic data, particularly led by CAD, and the value of the Indian rupee. Indian rupees today is the strongest in the last 6 months
Right.
or 7 months at 60 point.
After having seen 69 rupees.
Absolutely, 68 point something,
Yeah.
and right now 8 rupees down to 60.8. So this kind of data has given positive encouragement to the FIIs who have started looking at India in a big way, both in equity as well as the debt market. What people tend to forget and look at only the equity is that the strength comes when the FIIs put money in debt, and it is
Exactly.
long-term corporate debt, not short-term, which can be taken away quickly.
Right.
And we have seen almost $6 billion of debt market funds being subscribed to by
The
FIIs in the year 2014, 2.5 months of it.
That's good. That's certainly good news. Mr. Jindal, would you agree? Where do you stand? Do you stand with Mr. Bhanumurthy? Do you agree with him that some of the government policies have resulted in this positive sentiment in the market, or you think that it is the FIIs which have generally been, riding the market?
See, with due regards and lot of respect to both my friends, I don't agree to the basic theme that the market is in a bullish mode. Why so?
You don't even.
No, I
I
don't-
mean, Sensex, unprecedented levels of Sensex. Still, you don't say it's
I'll
bullish.
justify you. Yes. Everybody would be surprised,
Yeah.
including perhaps our viewers, that why am I saying so? Because I am a thorough stock market person. I'm a stock market person. Stock market is in my blood. So perhaps with due regards, I am the person who is most closely associated to stock market amongst all panelists. Why so? There's data. In January 2008, good 6 years ago from here, the market was more than 21,000. So something which was at 21,000 6 years ago is today at around 21,900. Just the
It
growth
touched
of
$22,000.
around 22,000. It crossed 22,000, 21. So what do you see? Even if somebody had put in money in a bank deposit, 21,000 rupees, had he put in a bank deposit in January 2008, I think the figure would be somewhere 32,000, 33,000, 34,000. There he would have been. So if you talk about Sensex, so 6 years the rise in Sensex has been, if you take it from that figure, around 3-4%. So basically, I think the market still is in a bearish mode. That is what we technically call bearish, and we are trying to get into a bullish phase, because stock markets are expected to be areas where the returns are much more higher. Our friend was talking about debt,
Right.
because debt is considered to be a safer and less riskier instrument. Now, debt also would have given higher return. Stock markets, I believed, would have been a bull phase had the Sensex. I mean, again, it would surprise people when I say data 35,000, 40,000 or more. Because see, anybody who invested 6 years ago at 21,000, if the value of stock, and in case you talk about mid caps, we were very nicely referring about
Mid
mid
and small
cap.
caps
The
also.
value of certain mid cap, still, if you take those rates, is 1/10 or perhaps 20% of the rates one in touch. So I think we are to enter a bull phase. This is only a start of the bull phase. We are not at all in a bull phase. We are in a bear phase. In the stock market investors, everybody know, the stock market investors who have been there for the past 2 years, 3 years, 4 years, they have not been a happy lot. New people are not coming to stock market. Stock market is not considered a vehicle for the past 2-3 years where investors have made money. So I think now if you come specifically why 22,000, if we consider that 22,000 is a good mark, I mean, I think there are 3 reasons. One is Ukraine issue was on the head of international economy. Up to a certain extent, the issue has been diluted, so that there has been respite. Secondly, dollar was a huge issue for us. We saw it touching 68 rupees 70 paisa. Now with dollar around 61, that's a relief. Thirdly, I think yes, Narendra Modi factor is there. So there is certain belief
There's a certain belief
that in case he is there, just allow me 30 seconds to complete. In case he is there, perhaps things can have moving. I think, see, with due regards to both the parties, both UPA and NDA know what has to be done for the economy. Both of them know. Both the parties are decent parties. They know, they understand. I have respect for both the parties. UPA, when they tried to do reforms in the past 2 years, they didn't get support. I mean, coalition at times didn't support them. Now, in case Mr. Modi gets through, in case he gets through with decent numbers to support him, perhaps there could be a belief in the market that he can have the economy, he may have the reforms which were due, or the policy paralysis which was being referred for the past 2 years. Perhaps those things may be happening. So that could be one of the hopes.
Okay. Mr. Dua.
I think I would only add to what has been said by saying, when you talk about a bear or a bullish market, it is always in comparison to what had been happening in the recent past.
We can't really...
Absolutely. 6 years ago, what had happened,
yes,
etc. I beg to differ on that entirely.
And I don't think anybody would be playing in the stock market who's playing in the stock market will keep their stocks for 6 years.
Absolutely. And the second point,
I think
can I just complete my observations? Second, it is the stability of the government. Whichever government comes, that is something which gives much greater confidence or encouragement to a foreign investor that there would not be volatility in the policies. There would be, and if a person who's generally believed to be coming, or what the industry would like to come, is seen to be a pro-industry decisive man, it adds much more.
It adds to the sentiment of the stock market. Quickly.
No, just to add to the discussion, when we have bad news, we criticize government.
Yes.
I think when you have good news, I think we should give some credit
No,
to the
that's
government.
exactly the point.
I would like to
In
just
fact,
add
that is the point which I wanted to make.
Many of the positive sentiments that's been built up at the moment is completely because of the government policies. The kind of, nobody expected that current account deficit will come down from 6% to 0.9%. Even the fiscal deficit, nobody expected that it will come down to 4.6%.
Right.
There are policy measures, and why FII is choosing India compared to China and other countries. Now FII feels India is a much better place than other countries.
Right. The point has been made. Shantanu, the irony is that what Bhanumurthy says, that the government's measures to some extent seems to have made an impact on the sentiments. But the irony is that if I go by what Jindal says, the market sentiments are now being more driven by what they're hoping that who will come into power, who is not. The present government is making policies which is helping out, but the market is looking at some other person. Is this the way the market functions?
Could be. The reason why, Girish, the point is, you're looking at markets just before election, a month away for elections.
Right.
You will obviously not go back and compare on January 8, 2008 and compare, because those companies, 9 of them top companies are still not there. Satyam is out.
Yes.
Okay, let's come back to that story, number one. Number two, the small company story in India is completely over. So that means there is a matter of concern there.
Right.
Now the markets are definitely riding high.
The whole euphoria about
exactly.
the market is not reflected in the small.
No, certainly not. The small story for me, I think, is almost over. I think there is definitely, in one line, you can say there is a Narendra Modi wave in the market. The FIIs are putting in money. They are presuming and hoping an investor-friendly prime minister will drive the economy much higher. Not to say the CAD has obviously made a serious impact in the market, and which is a very, very positive sign at a time when Chidambaram was grilled by the media for his gold import policies. Today he has been successfully able to defend his point. So there is a market sentiment that's playing close to the political lines. Nobody can deny that factor. And that's one of the reasons why FIIs are putting in almost more than $1.5 billion in the markets recently. So if you're talking fundamentals, the fundamentals are still weak. We are in a choppy waters. This is not the time to put in money. And the 6 months one has to sit and wait. But there is a growing sentiment in the market that this man is a very investor-friendly man and he could drive the markets. So I see that line as a very strong line.
A very strong line. Would you agree with that,
I
Bhanumurthy?
don't agree with him.
No, because
Dr. Manmohan Singh cannot be an investor unfriendly.
Sorry, there are two arguments to this.
No, I'm not saying Manmohan Singh
I'm
is
just trying to
investor
give-
unfriendly.
No,
the
there are two.
markets-
No, I just want you to reflect on this. There are two arguments to this. One is, see, looking at the announcement of the elections, what is happening in the markets has coincided with the announcement of the elections.
Right.
But whether announcement of the elections has been responsible for it, Modi factor, that thing. But if you look back, I was reading it, it's very interesting. In 2009, when the elections were announced, the market went up by 16%. And in 2004, it was announced, it went down by 19%. So there is no...
No, I don't think
So
markets...
there is... So the markets... Do the markets get influenced by politics or
Yeah,
not?
I'm just coming to that. Markets are not really stupid the way we think. They are much more brilliant people.
He plays the... I mean,
Let
he
me-
knows
so
something
that's-
about it.
I definitely
it's
want
not
to speak on that.
It's not just because of the Prime Minister Manmohan Singh or Prime Minister Narendra Modi going to make a big difference. I think markets also understand the kind of institutions we have developed in the recent period. They may be really worried about CAD, but I am sure they are also worried about CAG. Okay, I think there are institutions. We know very well many of the policies have been struck because of the institutional factors, not entirely because
policy
of
paralysis.
Yes. So I think even the new government whoever is going to come, they have to stay with this institution until unless we are going to weaken the institution, which we don't want.
Which we do not want it. It's not easy to happen.
Yeah.
Yes, Mr. Yeah. Let me get him. I'll come back.
Of course.
My friend was just referring to small companies. Actually, there's a very important point there. When we
No,
talk
first you please address this point. How much the politics you are quite convinced that the Modi factor is playing some role
Yeah.
in the markets.
Yeah, I am convinced. What was the question exactly?
No, that's okay. If you are convinced about it, you can go to the small
Yeah,
caps
yeah.
thing.
So I am convinced that yes, it does make a lot of difference because see, we had a 2-year period of policy paralysis. See, UPA, if you talk
Why
about
it happens is not the concern of the people in the playing in the stock market.
see, stock market people, they want politics to support economy. See, they want economy to grow because they have invested their money, the hard-earned money. So they are not very concerned why it has been happening. See, if you talk, I don't have any affiliation with any political party. If you talk about UPA-T, UPA-2, the first 3 years were good. In fact, these were the first 3 years where we had for 2 quarters GDP growth of more than 9%. So I'm not at all criticizing the period of UPA-2.
No, you're making a point about the small caps.
Yeah, small caps. See, what happens is when you talk about investors, retail investors, whom we are talking about, retail investors basically they go in for small caps and mid caps. Retail investors don't generally go in for a 2,000 rupees share, 1,500 rupees shares.
Right.
I can give you a lot of data. Many of the mid caps, many of the small caps are trading at 12%, 15%, or 20% of what they were. So actually, if you talk,
So you agree with what Shantanu says?
yeah, I partially agree to him. If you talk to investors, again with due regards to all my friends, they still don't believe and they have reason to do so that market is not in a bull phase because the share which he has purchased for 500 rupees 4 years ago, 5 years ago, and let me tell you, the government also officially says that you invest for long term. The government also suggests people to go in for long term. In stock market, all the experts will tell you internationally, go in for long term, which is 4 or 5 years. Nobody suggests you go in for 3 months or 2 months. So government also has been officially suggesting
but
that.
tell me,
So the small caps and mid caps, the returns have been
Okay.
still, yeah.
Still, I mean, we'll take that point.
Yeah.
Now tell me, Bhanumurthy says that the fundamentals are still not strong in the economy. Why is it that despite that there is so much of buoyancy in the market?
Stock market basically acts on the basis of future expectations. See, current fundamentals, okay. But stock markets always have a tendency of discounting earnings which are going to happen 1 year, 2 years. So if the market at any time feels that the future for the coming 6 months, 1 year or 2 years is going to be good, then the markets would discount that because this market always works.
Okay,
on advanced
I'll come to
discounting theory. And one more small thing.
I just have a very small
One more
point.
small thing with your
Yes.
permission, please.
Sure.
One more thing. There is another good factor. US and Europe are on a recovery path. USC 2 years ago, 3 years ago, it was down. Initially, you had subprime, then you had the rating issue.
We will come to the US.
Yeah.
You will come to the US. Yes, Shantanu,
Just
I
one
want to go
very
to
small point. I mean, before other people can take over, there is also a factor of the FIIs.
Yes.
I mean, FIIs obviously get very bullish over a new government coming in. The chances of that government trying to be investor friendly, but the FIIs, as Bhanu rightly said, they play to the market and they go by market sentiments.
And it's hot
Yeah.
money. It can
Exactly.
go, like we saw in August, in June, July, August. They just took away that.
Yeah, just exactly.
Some
And why
23,000
why
crores
they're
was
slowly
taken.
coming back? There is a tapering off in the US economy, and there is also a slowdown in China. So India is probably seen as a new destination, a new elections coming in, hopefully a new government coming in. So there are factors playing there. So it won't be wrong to say that there are certain political elements, there are certain market elements, both adding to
Yes,
the
Mr.
figure.
Dua.
I just want to add to what's been said. Let's see, when did the market sentiment improve significantly in the current sort of phase? It happened a day after the leader of the BJP, the prime ministerial candidate, made his economic statements. Two statements, one in the morning to the traders and the other at a function of the India Economic Foundation.
Right.
That is where, for the first time, he spelled out his economic vision. The industry received it very well, the analysts received it quite well, and the media carried it. It was all over the place. Just move on from there. Was that enough? Probably not. It certainly sent out certain signals on, if he becomes the prime minister, what might happen in the country. Because the volatility of the market, that hasn't come down. If you
hasn't
would see,
come down.
not at all.
Yes.
If you would see in the last few sessions, in fact, the volatility has increased. There is an index, Nifty's index, I think is called 6X or something. That shows that the volatility has actually increased by 28% to a figure of 17.775 in the recent sessions, which shows that people are happy that it's increasing, but at the same time they are not convinced
That it will stay.
it will stay that way. So a lot more needs to be done. Just to add to the point which was being made, that policy issues, yes, I don't call it result of policy issues, it's a result of data which came out. CAD data, the rupee data, value of the rupee, and I'm not so proud of what we talk about saying fiscal deficit has been reined in. After all, that 4.6% you have consumed in 9 months of the year, 101% of the fiscal deficit has been already covered by December. Whatever happens during this quarter is add on to that 4.6%, unless the government revenues by way of disinvestment and others increase drastically, because the tax revenues are not going to increase
We just
in
have
the next few days.
two more weeks to go.
Yes.
Yes, Bhanumurthy, now, you think, as Mr. Dua says, the market is still volatile. Would you agree with that?
Well, the volatility will be there even when it's going up or when coming down.
Right.
Fundamental nature
I
of the
think
market, volatility.
They're part of.
So this,
business.
this euphoria which is there is something which needs to be tempered. And what are the factors? What are the factors which can affect the market now? And in this, he says it's not a bullish phase, but generally we'll let us accept that it is a bullish phase. What will affect the market's bullish phase? What are the factors which can affect that?
So it can be both domestic as well as international factors.
Is one of the international factors, is the US Fed tapering thing, is that going to affect, or is it already been taken into
If the
account?
pace of tapering continues with the same thing what's happening for the past 2 rounds, I don't think the markets would be disturbed, because they have been absorbing all those information. But there are other political issues that some of the analysts really talked about in terms of Ukraine. I mean, yesterday UK Prime Minister was making a very important statement about Crimea and all those issues.
Right.
So if there's any disturbance, such kind of things happens, and the oil markets really become much more volatile, what we have seen. So we do have transmission of those kind of shocks to the Indian financial markets. But domestically, my own worry is that if you really get into a government which is really unstable, I think that is going to be the biggest factor to really capture, whether it's a
Any
UP or
government, yeah,
NDA, that doesn't matter for us. But I think we need to really go for a stable government. Whoever is
So
going
as
to
long
head
as Shantanu, as long as the election result, till the election result, which is May 16th, as long as the opinion polls are showing what they are showing now,
Yeah.
this trend in the market also will be,
The market will remain expensive. The market will remain volatile. But as I think the election is just very close now. I mean, I think this kind of trend will continue. till the polls are actually held, and then the results starts counting. The counting starts. So I think the markets will still remain expensive. It will be a bad point to invest in the market.
Yes, from the investor's point of view, he has given a hint. Would you agree with him that this is not the right time for the investors to invest?
No. With due regards, I wouldn't agree to him. I would stick my neck out and make a prediction. 22,000 was my prediction on certain channels. Now my next prediction would be 25,000 Sensex by Diwali. And I have data for so. I'll tell you.
And you would call that bullish, or you still say it would be bearish?
No, I'll tell you why so. There's a reason. There's a logical reason. To measure the market, there's an internationally accepted tool which is called PE, price earning ratio. How much is the market price of a share in comparison with its earnings? Now, generally the PE we had in India during all the bull phases since 1990, our PE is much lesser than that level. So when this is something which all the experts accept that this is a tool to measure whether the market is up or down, we are much below that tool. So I think if the PE of BSE Sensex goes more than 17, 18, then we can say it would be a bull phase. So if you ask me, yes, I stick on my words. If we cross 25,000, then I would actually consider we are in a bull phase. Please understand the position of the investor. Any share you invested at 400 rupees 3 years ago, 5 years ago is trading at 50 rupees, 60 rupees. There are certain shares in mid cap, small cap.
Okay.
So bull phase is when investors are making money on their early investments, and then PE, historical PE, which has been in bull phase, we cross that PE as far as the Sensex is concerned or Nifty is concerned. So I would stick to what I said, that still we are entering into a bull phase. I wouldn't say we are trying to enter a bull phase, but actual bull phase would only start when the Sensex grows beyond 25,000.
Okay. Mr. Dua, in fact, in October, I was reading somewhere, in October, one of the analysts, stock market analysts predicted that by March 2014, the Sensex will be 17,000. What we are seeing today is
absolutely altogether different story.
Altogether at odds with what the...
Yeah, but
this kind of, how much do we go by the stock market analysis also?
What concerns me is that, coming back to you talked about which can be the local factor and what's the external factor, which could affect the things here. I think tapering of the quantitative easing or tapering by the United States Fed has probably been built in, and the very fact that you now have a governor, the chairperson there, who had made it known that her policy is to go about it modestly, moderately, phase it out, and there is already easing of it. She started tapering off, but it's much slower than what her predecessor would have probably done.
Coordination within the G20 countries.
Yes. But what is worrying me, and is I go back to saying that dispute in Central Asia is a serious one.
Right.
The Ukraine one we should not underestimate at all.
The impact of it.
Absolutely. It impacts India directly. After all, the industrial defense complex of Ukraine is a major supplier of defense equipment to India. A whole lot of our equipment, defense equipment, aircraft, etc. have come from there, and our spares are entirely linked to that country's availability. If something happens here, we are going to be in dire stress. Our requirement of defense will go up tremendously. We'll have to buy it elsewhere. The moment that happens, it is going to impact our rupee. And the rupee will not remain 60. And similarly, the oil
prices.
The oil prices go up, and there is every possibility that could happen, because after all, Ukraine may be buying gas today from Russia. But the Ukraine is a major consumer also. There are issues which will come to the fore, impact the rupee, impact our CAD, etc. The economic data which today has viewed, kind of given there some hope to the FIIs, may not remain
the same.
Absolutely.
On that note, I think we need to end. But Mr. Jindal feels that the small investors can take some risks now, but Shantanu thinks that this is not the right time. Well, it's always this dilemma which the small investors will face. They will have to decide for themselves. But as Mr. Dua and Bhanumurthy says, there are factors which in the coming months can affect the stock markets and also the sentiments in the stock markets. Also, we'll wait and watch. Obviously, the politics, the elections is also something which seems to be affecting the sentiments in the market. We'll wait and see what will happen. Thanks to all my guests, Mr. Professor Bhanumurthy, Ajay Dua, Akash, Jindal and Shantanu, Guha. Please keep watching. We'll come back with another issue on the big picture same time tomorrow.